What is the first thing you would do to help bring down the cost to make things more affordable?
Drill, baby, drill.
All right, we have more changes unfolding in the U.S. economy and in the global energy markets, changes that now have the most important commodity on the planet beginning to shoot higher, moving in one direction and causing some of our elected representatives to start feeling a bit flustered. We're going to look at what the hell is happening with the price of oil, why it's moving like a rocket all of a sudden, and what we can expect the collateral damage to be, because it's incorrect to assume higher energy prices won't affect core CPI, the inflation metric that the Fed actually cares about, because indirectly it does. It's the primary reason that we saw inflation shoot to the moon last year. There are downstream effects that bleed into all aspects of the supply chain, all facets of the economy, and we have the data, the numbers just released by Morgan Stanley in a report that they published last week looking at this very question. How much will triple-digit oil prices seep into the core inflation metric? We go over that report in the second half of the video, so make sure to stick around for that. But before we get started, if you're not already a subscriber of this channel, consider subscribing. It helps the channel out, and I appreciate your support. So oil, folks, the black gold of the commodity world, is on a war path this past month. 30 days straight almost of continuous gains, shooting straight to the moon and taking both Jerome Powell and Joe Biden with it, as both of these men are watching this closely, should be watching it closely, as both of their fates may be directly tied and correlated to where the price of oil goes. We have a bit over 400 days before the next presidential election. 400 days, folks. A lot can happen in between now and then. And regardless who the nominees end up being, it's obvious that inflation will be a big point of conversation as the campaign season ramps up. Well, last week, August's inflation data was released, and headline CPI spiked right after falling from 9% to 3% this past year, just reaccelerated last month. And the reason why, the price of gas. And I know what you're thinking, that the Fed doesn't watch headline CPI for this reason. Instead, they look at core CPI, as it excludes the volatile sectors like food and energy. But as true as that is, higher energy prices, oil prices that cross triple digits begin to seep over into that core CPI number. But before we look at that, let's just take a stroll back on memory lane and remember the crazy road oil has traveled this year. February 24th, 2022 was the day that we saw the price of oil spike. That was also the day that Russia invaded Ukraine, and shortly thereafter, we saw the President of the United States tell us that we are no longer permitted to buy Russian energy, a move that he said would cripple Russia's economy and make it that much more difficult for them to fund the war effort, right? Here is him telling us this. Take a listen to this.
Yeah, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine.
Well, that's definitely not how it turned out. Instead, for the months that followed, we saw some of the highest oil prices ever, hitting more than $120 a barrel in June of last year. And with higher oil prices comes higher gas prices. A few months later, the national average for a gallon of gas hit an all-time record high, averaging $5.02 a gallon, highest on record, folks, which, of course, hurts who the most? Not the folks in D.C. cheering this policy on. Instead, it hurts the rest of us. And boy, did it start to hurt.
In an unexpected twist, pump prices are soaring nationwide this winter. Tonight, drivers are once again fuming over more expensive fuel.
Gas prices going up.
A decision to cut supply, the gas prices will be once again on the rise. Those fears familiar to Californians.
I just scrounge up $8 in my pocket right now, dude, and I just put it in. Don't really want to put anything more. I'm not really going to be driving that much.
And the pressure got so bad last year that the administration decided to start removing sanctions, not on Russian energy, but on Iranian and Venezuelan energy, sanctions that have been in place for years for a reason. Meanwhile, all of this, the sanctions on Russia we're having the opposite effect than originally intended, thinking sanctioning Russian oil would hurt Russia's economy. It caused the price of oil to rally, meaning making every barrel of oil that Russia sold that much more profitable, which seems blatantly obvious when you think about it, right? You remove Russian oil from the market, obviously the price of oil will spike on that news. They had to know that that would happen. So then, was it deliberate? Either they did it purposefully in an effort to help Russia pay for the war effort, which really isn't that far-fetched of a thought. We've heard the defense secretary say that the point of this proxy war is to keep Russia entangled in Ukraine, keep them busy and occupied over there to degrade and exhaust their capability of doing it anywhere else. So it's either that or they really did just make that boneheaded of a decision. Either way, we have Washington on their heels in late 2022. The American people angry that it cost $100 to fill up their tank. Look, gas prices are directly affected downstream from the price of oil. Oil trades on the exchanges, and its price largely moves based on supply and demand. So what Joe needed was more supply. He needed somebody to pump more oil into the marketplace, and that's why he turned to Venezuela and Iran after Saudi Arabia snubbed him and said no. But that wasn't enough. So what did he do? He decided to tap our Strategic Petroleum Reserve, the SPR, the oil supply that the United States keeps for times of emergency. Think of it like a backup supply. Like when you buy canned goods before a storm, in case something goes wrong, you have that backup supply. Well, the administration was feeling the heat and had friendly nightly news shows running segments almost every evening back then, showing Americans struggling to fill up their tanks. You had stickers like these even beginning to pop up at gas stations across the country.
It's this little sticker that's popping up across gas stations all across North Alabama. It's a picture of Joe Biden, and they place it next to the high dollar signs, and underneath it says, "I did that."
So we began emptying our strategic reserves. Here is what the SPR looks like now. We have the lowest reserves in 40 years. This jump that you see in May 2020, by the way, happened when the former President Trump, directed the DOE, the Department of Energy, to purchase 77 million barrels of American-made crude to refill the SPR, which you have to admit, was a good business decision. The price of gas at the time was extremely low. So let's fast forward to present day. We have 46 days of supply left. And we have the price of oil rising consistently for the last month. The price of Brent this morning is at $96 a barrel. This, by the way, doesn't reflect in the price of gas immediately. It shows up downstream, right? So what would happen if the price of oil were to cross into triple digits like we saw last year? Would it cause a massive problem to the Fed's inflation fight? Well, Morgan Stanley just released a report yesterday answering some of those questions. A lot of people assume that the price of energy is only reflected in headline CPI and don't realize how it bleeds into core CPI as well. When the price of gas goes up, that makes almost all tangible products more expensive to build, more expensive to ship and to transport. That's how we had such high inflation in 2022 because of higher gas prices. Companies raise their prices, right? If you're selling, cereal, for example, if the trucking company charges you more to ship your cereal boxes, you're going to need to raise your prices. So gas prices do bleed into core CPI. Well, just how much does that actually happen? Here's what Morgan Stanley says. The piece is called Energy Effects, Inflation, and the Fed, published last week on September 13th. They write this: oil prices have rallied, with WTI crude oil trading back at $87 a barrel, up from a recent low of around $68 a barrel in June. And by the way, since they wrote this, prices have jumped even further. Crude's now around $93 a barrel. Brent's over $95. They go on and write this: the national average price per gallon moved above $3.80 this week, a 58-cent increase year to date, but still well below the $5 peak in June of last year. The rally in crude oil prices is a supply shock driven by aggressive production cuts from Saudi Arabia and to some extent Russia. While gasoline futures, which feed into consumer price inflation forecasts, project no further spikes in gas prices, geopolitical factors create substantial uncertainty. Here's the numbers that they came up with, how much of an impact higher gas prices actually have on core CPI. They write this: On the back of the price rally, investors have voiced concerns over the implications for inflation and what it might mean for the Fed's battle to maintain price stability. When studying the pass-through to broader consumer prices, our previous work finds that a 10% increase in oil prices coming from a negative supply shock adds 35 basis points to headline CPI for 3 months, but just 3 basis points to core CPI. So 35 basis points to headline CPI, but only 3 basis points to core, like you see on this chart. But they also write this: higher energy prices must be sustained for some time to have a greater, more durable effect on core price, like we saw happen last year in 2022. So it's anyone's guess where oil goes from here. Let me know in the comments. Do you think that oil's going to cross triple digits before the next election or not? Let me know. All right, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's all right too. Press the dislike button. Either way, I appreciate you watching.